Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on BSE Ltd. Our analyst maintains positive view on BSE with a potential upside of 30% from the current market price. BSE has made considerable progress on the Sensex 30 derivative index option contracts, while BankX is also seeing healthy traction on expiry days. The company's focus is to increase non-expiry volumes and long-dated contract volumes. Going forward, both pick up in overall volumes in equity derivatives as well as gradually increasing tariffs on BankX and Sensex contracts beyond the current week remains a key catalyst. We believe that BSE is likely to deliver robust revenue CAGR of 39%, EBITDA CAGR of 92%, and earnings CAGR of 69% over FY23 to 26. At current market price, the stock trades at 36.6 times FY25 and 27.1 times FY26 estimated core earnings. The stock has outperformed the broader indices in last 12 months. Next, we cover Castrol India. Our analyst maintains buy rating on Castrol India with an unchanged price target of Rs 240. Castrol management is now focused on volume-led growth while maintaining its margin guidance of 22 to 26%. The company aims to grow about the lubricant industry growth rate of 4 to 5% per annum with focus to expand presence in rural areas. The company has 3-point strategy: onward, mobility focused; upward, industrial focused; and forward, new opportunities and growth beyond lubricants including EV fluids, auto care, maintenance through branded workshops, investment of 7% in KI mobility, and Castrol oil change through GOBP. A valuation of 19 times calendar year 25 estimated EPS seems reasonable given the decent growth outlook, healthy dividend yield of 3 to 4%, high ROE of 48%, and strong cash position.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.